Welcome to Pillar 4, the Eligibility Gate. This is the doorway most first-time buyers do not even know exists. They jump straight into searching for cars, without realizing that lenders have already decided whether they are eligible long before they ever step onto a lot. Think of the Eligibility Gate as a giant stone archway in your first car mastery quest. Behind it lies the world of finance, the approvals, declines, rates, terms, and conditions. But the gate only opens if you meet the criteria, and the criteria are not always obvious. Most young Australians make the same mistake. They start looking for a car before they understand what they can actually get approved for. They'll fall in love with something, only to discover later that the lender will not support it. This pillar flips that around. Before you search, before you compare, before you test drive, you need to understand your eligibility. Eligibility is not about luck. It is not about guessing. It is not about hoping. It is about understanding the rules of the game. Lenders look at your income, your stability, your living situation, your expenses, your credit behavior, your employment type, your savings habits, your existing debts. They are not judging you. They are assessing risk. And here is the truth. You can be a perfectly responsible young adult and still get declined, simply because you did not understand the rules. This pillar gives you those rules. In Part A, we will explore the mindset and the preparation, the things you must understand before you even think about applying. In Part B, we will break down the different types of lenders, dealer finance, banks, and specialist lenders, and how each one views your eligibility differently. In Part C, we will reveal the tactics used inside dealerships, especially in the finance office, and why dealer finance operates under different rules than brokers in Australia. And in Part D, we will explore the overlooked advantage, using a finance broker as your shield, your guide, and your secret weapon. Your quest continues. Now that you understand why eligibility matters, let us explore the three main types of lenders you will encounter and how each one views your application differently. Because not all finance is the same, not all lenders are the same, and not all approvals are equal. Let us break it down. 1. Dealer finance, the single lender trap. Most young buyers assume dealers have access to lots of lenders, but in reality, most dealerships only use one primary lender, the one tied to their floor plan or finance partnership. This means you are not being compared across the market, you are not being matched to the best lender for your situation. You are being fitted into the lender the dealership prefers. Dealer finance is convenient, but convenience comes at a cost. Dealers can mark up interest rates, add hidden fees, push add-ons, extend loan terms, prioritize profit over suitability. And here is the key point. Dealer finance is not subject to the same obligations as brokers in Australia. They do not have to follow the same best interest rules. They do not have to justify why they chose that lender. They do not have to compare options. They just offer what they have. 2. Banks, conservative, slow, and narrow banks. The big ones, unnamed here, are safe and familiar, but they are also conservative, strict, slow, limited in flexibility. Banks prefer stable employment, long work history, clean credit, low risk profiles. If you are young, casual, part-time, or new to the workforce, banks often decline you, not because you are irresponsible, but because you do not fit their narrow criteria. Banks also do not specialize in car finance. It is just one product among many. 3. Specialist lenders, the flexible middle ground. Specialist lenders exist for one purpose: to help people who do not fit the bank model. They understand apprentice casual workers, students, young adults, limited credit history, short employment history, non-traditional income. They are not bad credit lenders. They are real-world lenders. They look at your situation more holistically. They assess risk differently. They offer approvals where banks say no. But specialist lenders vary, and matching the right one to your situation is the key. This is where brokers come in, and that is what we will explore in Part D. But before that, we need to talk about the hidden world inside dealerships, the finance office, the tactics, and the traps. Your quest continues. Welcome to Part C, the part most first-time buyers never hear about until it is too late. Let us step into the dealer finance office, the place where the real game begins. When you sit down with a finance manager, you are not talking to a salesperson anymore. You are talking to someone trained in psychology, negotiation, upselling, anchoring, urgency creation. Their job is simple. Increase the dealership's profit per sale. Here is how they do it. 1. Payment anchoring. They focus on the weekly repayment, not the total cost. If they can make the weekly number look small, they can hide higher interest rates, longer loan terms, expensive add-ons, inflated fees. Urgency pressure. They say things like, "We can get you approved today. This rate is only available now. Someone else is looking at this car." It is designed to make you sign before thinking. Free add-ons disguised as protection. They offer paint protection, fabric protection, tinting, rust proofing, extended warranties, gap insurance. Most of these are overpriced. Some are unnecessary. Some are pure profit. As for 4, dealer finance is not regulated like brokers. This is the part young Australians never hear. Dealers do not operate under the same best interest obligations as brokers. They can mark up interest rates, add hidden fees, push unsuitable products, prioritize profit over your needs. This is why dealer finance often costs more. Not because you are risky, but because the system is designed that way. Speaker follow-up. The finance manager's goal? Their goal is not to find the best lender for you. Their goal is to maximize dealership revenue. This does not make them bad people. It just means their incentives are different from yours. And that is why understanding the eligibility gate matters. In Part D, we will explore the alternative, the option most young buyers overlook, using a finance broker as your shield, your guide, and your secret weapon. Your quest continues. Now that you understand dealer finance, bank limitations, and specialist lenders, let us talk about the option that gives you the most control. A finance broker. Not salesy, not pushy, not a middleman, a guide. A broker is your shield, your secret power, because they work for you, not the dealership, not the bank, not the lender. Here is why brokers matter. 1. Broker compare lenders. Dealers do not broker can access multiple lenders, specialist lenders, flexible lenders, lenders suited to young buyers, lenders who accept casual workers, lenders who accept apprentices, lenders who accept limited credit history. Dealers usually use 1. Brokers must follow best interest rules. In Australia, brokers are legally required to act in your best interest, justify lender choice, compare options, avoid unsuitable products, prioritize your outcome. Dealers do not have these obligations. 3. Brokers understand eligibility better than anyone. They know which lenders accept your employment type, which lenders accept your income level, which lenders accept your credit history, which lenders accept your age, which lenders accept your living situation. They match you to the right lender the first time, avoiding declines that damage your credit. 4. Brokers protect you from dealer tactics. They know the upsells, the add-ons, inflated rates, the hidden fees, the pressure tactics. They have seen it all. They know how to shield you. 5. The overlooked advantage. Car finding services. This is the part most young Australians never hear about. Some brokers, or partner services, can also help you find the car. It can source from dealers, private sellers, auctions, fleet sales, wholesale channels. They know market prices, red flags, negotiation strategies, inspection shortcuts, dealer behavior, auction patterns. It is like having a guide in a dangerous realm, someone who knows the traps, the shortcuts, and the hidden opportunities. For a first-time buyer, this is a massive advantage. Closing the eligibility gate is not just about getting approved. It is about understanding the system, protecting yourself, and choosing the path that gives you the most control. You now understand the lenders, the rules, the tactics, the protections, the traps, the secret weapons. In the next pillar, we will explore pre-approval, the confidence move that transforms your buying power. Your quest continues.